It's been quite interesting seeing dollar demand trumping yen demand, for example, in the sort of haven play.
Yes.
What could we see from the Fed that kind of directs the next leg of potentially this rally?
I think it's really about the guidance, because it does seem that it's very clear that they'll go for 25 basis points. There's been a bit of talk. I mean, actually, this time last week, with risk aversion very elevated, there was a bit of a toying with the prospect of no change. So that was always very likely that it'd be 25. So it's about the dot plot, that projection of rates, commentary around the balance sheet. They probably won't commit themselves to when they reduce the balance sheet. So I guess it's their balancer when Powell talks about how hard are they going to go on inflation, because the job market's very good. They're way above their inflation target. So how worried are they about Ukraine, the impact of higher energy prices on the consumer and business spending? So I think that's probably helped guide the markets in terms of how high rates go.
I mean, Australia is also worried about the impact on household and business sentiment, but seen really as a net beneficiary of a commodities boom and the price pressures to that end, right? That big move in the Aussie dollar, is it continued, or have we reached a point where, there's a bit of a breather? Well,
yeah, I guess last week, as Shery said in the introduction, the Aussie had taken a step back last week, but I think it had risen 5 weeks in a row. And if you look at one of my favourite pages on Bloomberg WCRS, and you just take it from the 23rd of February, where the eve of the invasion, the Aussie is number one, and the Kiwi second. Mostly it's a strong dollar story. The Aussie's starting to come off a bit now, but the scale of the commodity price rises, and the fact that the mixture of commodities that are soaring is very, very much what Australia exports. So I think that's been very supportive, but clearly the RBA is not in a great hurry to change rates. Those differentials will work against the Aussie dollar for some time. So we don't expect any change until August from the RBA, and I think that will cap Aussie rallies near term.
Whether it's the Aussie or the Kiwi, is that what's going to be the driver for these very commodity-linked currencies in other Asian nations as well? Not to mention, of course, in LATAM, we continue to see these surges in the Brazilian real, Colombian peso, and so forth.
Yeah, so it is very mixed. Obviously, for some commodity exporters, it's a net gain, as we've seen for Aussie and Kiwi. Canadian dollar's not far behind either. If you've got that strong boost to your commodity export prices, but your growth outlook maybe hasn't changed all that much, if only from distance, from being from Europe, for example, then that's obviously positive. Other commodity exporters, maybe their currencies don't really have the liquidity that might be so attractive during a time of heightened risk aversion. So I think for the most part, the G10 commodity exporters are the ones that are probably going to make the most stable gains. But as you say, it's not just those currencies that will gain from this surge in prices.
Sean, what's happening with the Japanese yen currency pairs? I mean, we're talking about a 5-year low against the US dollar when we have a war in Ukraine.
Yeah, it's been remarkable, really, that this sensitivity of the Japanese yen to risk aversion is much lower than it used to be. So it even didn't really align during the global pandemic, sort of March 2020. It really didn't line up that well. If you were betting on a steep fall in dollar yen in response to the dislocations of the pandemic, then it actually didn't work out very well for you. So as you're talking about interest rate differentials, the fact that the Fed is almost certain to kick off rate hikes this week and to follow up, we think, for the next 3 meetings at least consecutively. And on Friday, we should have the Bank of Japan keeping that 10-year JGB target at 0%. And it just looks as though that yield differential is just too tempting for outflows from Japan, and speculators are very much long dollar yen too.
When it comes to rate differentials, what other currency pairs are you watching? Because we continue to see strength in the Chinese yuan when the Fed and the PBOC seem to be going in opposite directions.
Yeah, so obviously the yuan has had a very substantial insulation from. There was never the QE equivalent in China, so they've had that support that discourages capital outflow, and clearly China's trade balance is just so enormous. The surpluses have just surged during the pandemic, so that provides the yuan with a lot of insulation. So if we're talking sort of a 6 to 12 month outlook, really the yuan is one of the few currencies that we've been consistently expecting to outperform the US dollar, even though rates will be rising. So maybe it becomes a bit more mixed in the second half of the year. But yeah, for the most part, the yuan's on a very solid footing.